Let's talk to Oliver Sloup at Blue Line Futures about what he thinks of these markets today as we get started here. Oliver, you mentioned just before we went on the air about how these markets are flying around. What are you hearing from the trade and from producers as well this morning?
Well, a lot of volatility. Obviously, we're seeing quite a bit of red here in the grain markets to start the week, but it's really a risk-off mentality across the board. If you look over at the stock market, we're down 3% there. Oil's down 5%, and silver's down 10%. A lot of this on the back of the U.S. dollar attempting to break out a little above some resistance here. If we get some follow-through on that U.S. dollar, that could encourage some accelerated selling pressure here to start the week. This is kind of a sell first, ask questions later type of environment. On top of that, we do have option expiration for October options in these grain markets on Friday. And looking at where a large amount of the open interest is for corn, $3.65. That's where a lot of the puts and calls are. And for beans, $10 is a lot of open interest as well. So those are going to be maybe some key magnets and price points to keep an eye on here through this week's trade.
December corn down 6 3/4, 371 3/4. March is down 6 3/4. The May is down 6.5 pennies a bushel right now. November soybeans down 18.5 at 10.25. January down 17.5 at 10.29 3/4. And that March is down 14 3/4 cents. On to the wheat market. We'll start in Chicago, where December's down 11 at 5.64. July is down 9 3/4 cents. Kansas City wheat December down 9 pennies at 4.95 1/4. That new crop July is down 8 cents. Then in the wheat market for Minneapolis, December's down 7 1/4 at 5.44. July is down 7 1/4. And cotton, it's also in a kind of a sell-off mode here today as well. December down 83 points at 64.83. Has this been building for a while, do you think, Oliver? I suppose we could call this a correction?
Yeah, I think it has been. Obviously, we've had a tremendous rally in these grain markets, most notably probably the soybeans. We've been trading in overbought territory for the last month and have rallied really over $1 since entering overbought territory. So this is long overdue, and I think it is healthy for the market. I think we pull back to $10, start to consolidate around there, and we can start to maybe build a little bit of a base. And if we continue to get good exports going forward, I think we continue to work higher. But a healthy pullback, I think, is what this market needs, kind of a cleansing, so to speak.
Okay, if we would hold at $10, does that give the incentive to both corn and wheat to also kind of find some kind of a level to firm out and maybe hold?
Yeah, I would. If we can hold $10, I think a lot of the grains would start to stabilize. But again, we need to see that good export data continue across the board to keep the buyers interested, willing, and ready to buy on these pullbacks. That's what we've seen here over the last couple of months. That $10 is obviously psychologically significant to keep that going forward. A break and close below there might have or cause a little bit of a buyer strike and keep buyers at bay in the near term. So $10, if we get back down there, that's going to be a very pivotal point in setting the tone going into the end of the year.